What's up, builders? This is Raise the Bar Radio, where we talk about building wealth, raising capital, and all in all, raising the bar in your business and your life. This is the No BS podcast for capital raisers, investors, and entrepreneurs who are serious about scaling their business and living life on their own terms. I'm Seth Bradley, securities attorney, real estate investor, and entrepreneur, bringing you world-class strategies from the best in the game. If you're ready to raise more capital, close bigger deals, build a better you, and create true financial freedom, you're in the right place. Let's go.
Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
Hello, and thank you for joining the Mailbox Money Show. My name is Bronson Hill. I'm very excited for this episode with Seth Bradley. You're going to really like him. He's done a lot of things. He's like the Renaissance man. Like, he has done passive investing. He's done active investing. He owns a couple gyms. He's starting another one. He's got a couple startups he does. He's got all kinds of things, speaking very intelligently to a lot of different topics. He also has a show called The Passive Income Attorney. He's actually also an attorney as well and puts together syndication paperwork. So he does a lot of different things. And so I always love talking to people that are doing many things because, first of all, it inspires me that I'm not doing enough. And then secondly, they'll speak very intelligently on kind of trends that are happening. So he's talked about what we're going to talk in this interview about what happened over the last few years. He's doing less real estate, looking at some other things, and just what do you do if a deal does not go well? What are the steps you can take as an investor? So I think you're really going to enjoy this. We also get into AI and some awesome other topics. So let's jump in. Seth, welcome to the Mailbox Money Show.
Bronson, what's going on, buddy? Good to see you again.
Hey man, we're both in Southern California. I know we're not that far apart, but you're in like the better part, especially lately with all the fires up in LA recently. You're in San Diego, man. I don't know anybody that says they don't love San Diego.
Yeah, man. I mean, there's no better place in the United States, that's for sure. I mean, I've seen some beautiful places around the world, and I don't know, San Diego still might beat it. I get a little bit used to it because I've been here for quite some time now, but San Diego is really tough to beat.
Yeah, awesome, man. Well, I'm excited to have you here today. I know you're an attorney. You have your podcast called the Passive Income Attorney Podcast, and you also work with TribeVest, which helps investors. And you have a lot to say around diligence, around deals going bad. We've seen deals. We've had a couple deals that have really struggled. I've been an investor passively in deals, some deals that have struggled. People don't really talk about this as much, and I think it's really important to talk about. But let's talk about kind of what's changed the last couple of years. Interest rates have risen. Obviously, if you're a multifamily investor, the deals maybe aren't as juicy as they were. The projections are a little lower. They're a little far between as far as deals that actually cash flow or deals that make as much sense. But what have you seen in the last couple of years, and how have you kind of shifted a little bit of your business and your investing?
For sure. I mean, it's been an experience, right? I think a lot of the passive investors out there that are listening, or if you're an operator or a lead sponsor out there, the same thing. I mean, we've gone through a period of time here, starting, I think, back when COVID hit in 2020. That was kind of the first dip in the market that we've seen in this kind of generation, right? Like, the Jobs Act, well, I should say the previous dip was in 2008, 2009. That was one cycle, but that was before the Jobs Act of 2012. So the Jobs Act of 2012 is where some of these private investments started being opened up to more people, and more people like ourselves were able to get involved and start raising capital and do deals. And you've just seen that market kind of exponentially grow since 2012. So we haven't seen a downturn until COVID hit in 2020. And that one was kind of weird, right? Because it was just kind of a blip. It wasn't because of the economy. It was because of something that just, nobody's going to be able to predict. But that's the first crack in the armor that we saw. And then after that, then we saw the interest rates go up in 2020, towards the end of 2022 and beginning of 2023. And that's what really started, giving us this experience that I'll say that we're still kind of going through, because the interest rates are still a little bit higher than what we've seen over the past years. And we're seeing more deals go bad, right? Or at least, there may be a capital call or two, or perhaps, some of your distributions, if you're a passive investor, might be on pause. And these are things that we're just not used to seeing, because we're just used to seeing over the past, 10 years up till 2022, all the deals have just gone really, really well. So it's a surprise to us, and it shouldn't be, because, it's cyclic, but we'll figure it out. And, you're just seeing these things that we've all been warned about, and they're now coming to fruition.
Yeah, it's interesting. I think if you, between 2010 and 2020, or 2021, even if you just owned multifamily apartment, you were a genius, right? Because things were just only going up and to the right. And then all of a sudden, like there's that quote by Warren Buffett says, you can only tell who's been swimming naked when the tide goes out, kind of thing. And then the tide,
Exactly.
the interest rates rising, the tide goes out. And it's like, oh my gosh, this isn't working the way we'd planned it. And now you and your portfolio, you guys have done very well. You've had some great, I know you haven't done as many deals more recently, but your deals have done well. Is that because you did kind of fixed interest rate, or it's just the markets you chose? Or I'd love to hear a little more about that. That's
right. I mean, fixed interest rates, to be honest, were a huge thing. That's one thing that we really pushed for in our deals, and that saved us a little bit when these interest rates started to rise. That protected us. You saw that those were the deals that got in trouble. Those adjustable rates got people in trouble, and there towards the end, like let's say 2021, 22, it was really hard to make the deals start to continue to work and get those returns that we promised those passive investors without taking those adjustable rate loans. So, those folks that got in 2021, 2022, maybe the beginning of 2023, those deals had adjustable rate loans, and that's where they got into some trouble.
Yeah. It's interesting kind of how things have changed. Now it's interesting too. There was a time, not even that, just a few years ago that real estate was cash flowing pretty well, especially multifamily real estate. And now it's pretty tough because, you got rates are higher, costs, the price maybe have come down a little bit, but you got higher insurance, you got higher other costs, other inflation things, there's not a lot of cash flow. So a lot of, syndicators or multifamily investors have kind of just stepped out, or maybe they got pitched in a deal here and there. So we've shifted a little bit we still do some multifamily in specific situations, but we've switched to go really focus on oil and gas. We're doing other types of businesses. Like I mentioned, we're buying this business that's an e-commerce business, high cash flow. And then there's also debt funds. Debt these days, there are debt funds paying like equity was paying with less risk than it was a few years ago, right? So if you can get, not all debt funds are the same, but there's some that are first position, that are low leverage and things like that. Are there anything else that you're finding for cash flow or that you're finding attractive right now, or as an investor?
Yeah, I think you got to just look a little bit deeper. There's still some decent multifamily deals out there too. And that's always going to be, to me, kind of like the bread and butter, right? Like that's something that we're always going to need. It's always going to be something that people are interested in. Because we've all lived in apartments at some point in our lives, and I think it's an easy thing to grasp mentally. Okay, like I'm going to invest in a multifamily or apartment building because I've lived in one. I know what it's like. I know how they work. People pay rent. You collect. Expenses, that sort of thing. But it's a lot tougher to find those deals. So people have looked at other things. So I've seen a lot of debt funds, like you said. A lot of people pivoting to even smaller multifamily properties. Before we were looking at like 100, 200, 250 unit properties. Now I've seen a lot of people kind of ratchet that down a little bit and look for some better deals in some smaller properties, maybe in the 25 to 75 unit range, that sort of thing. I've seen people get into mobile home parks and RV parks because we saw that go quite a bit during COVID as well, and then came rocketing back down. But now you can kind of see where it really sits. Now you can see what the value of that asset is. So you can see that what they really are without that big spike for COVID. And those are turning out to be some pretty good investments to get involved in too.
Yeah, and I know, we talked about this before we started recording. You and your wife, you guys also operate a business, or you guys have a gym, a couple gyms that you operate. Tell us about that. And is that, I know sounds like you're spanning, so it sounds like it's going well. I need to pop into a gym. I'm probably getting my butt kicked if I pop in there, and you're going to go through the Seth Bradley workout there, right? So.
We have a couple of gyms right now. We have one open in Oceanside. This is in San Diego County, one in Oceanside, one in Poway. I'm getting ready to open up a third one in Encinitas. It's under the Burn Boot Camp franchise flag, so it's a franchise. And I got really interested in franchises for that, and then I ended up buying into another franchise. I ended up buying into a water restoration franchise called All Dry. So we've got a few businesses going, but those gyms are great, right? Once we battled through, again, I hate to keep bringing up COVID, but it keeps coming up. But we battled through COVID. We opened up right before that hit, actually 1 week before it hit. So then we had to shut it down and work out outside, work out inside. We had to do online workouts, those sorts of things. Had our lead trainer in our apartment recording videos, and me and my wife were in the background doing the exercises. Pretty insane what we had to go through, but they're doing really well now. And luckily my wife has taken over that business and she runs the whole thing. So I don't do anything. She doesn't even want me involved anymore. So it's fantastic. It's actually turned into passive income for me.
For you, it's passive income, right? For her, it's
right.
it's fitness income, right? But that's, I mean, it's really, a lot of people like lifestyle businesses, where you're like, I think it's just a cool thing to say, hey, I own a gym, or I own a restaurant, or I own this thing. I mean, a lot of like really wealthy people will be like, oh yeah, I own a vineyard, or I own a horse racing thing or something like that. But is it, I mean, you don't have to get into specific numbers, but is it pretty, you're opening another one. So it's pretty lucrative to do it. It sounds like it's working out well. It's a boutique gym that does kind of boot camp type stuff. And you have certain classes you go in, and those have become super popular, I think, all over the US, but especially in big metros like Southern California.
For sure. And look, I don't want to say that it's easy, because it's definitely not. You have to have the right mindset. You've got to be an entrepreneur. You've got to be able to fight through the hard times. But these types of businesses, they're kind of done for you to a certain extent. They give you the marketing plan, they give you the business plan, they give you kind of the pro forma that you should be aiming for. Especially with a franchise, there's dozens, if not hundreds of other franchisees that are doing the exact same thing you are. So any question or any problem that you're going through, they have already went through it, or they're going through it. So you can bounce ideas off of, kind of similar to like a mastermind, right? Something like that, where you get involved with a few people and it's like, oh, how can I get around people that have the same problems as me? In a franchise, that's already built in. And it's even more dialed in, because these are very specific, like brand specific, industry specific questions and problems that you can bounce those ideas and have those questions answered by your fellow franchisees. But as far as like profitability, again, it's great because you can predict it. Like the idea behind it, if you buy one, you figure it out, then you buy more, and then you keep going, you stack and stack and stack. And that's how you really make a lot of money in franchises. You hear people that own dozens or hundreds of Papa John's and things like that. Like, you need to be able to stack them, but they're definitely profitable, and they're fun. It's a fun business. Like you said, it's fun to be able to say that you own a gym. It's fun to like walk into your own place, if it's a gym or a restaurant or whatever it is, and you're the owner. It just feels good, right? It's a little bit more, rewarding, I should say, than some of the other businesses that we're involved in. For me, it's a law firm and buying real estate, and this is just a little bit more rewarding. Just like being there, just the presence and having a brick and mortar space. It's pretty cool.
I love that. It's really interesting. You guys, I didn't realize you guys are really serial entrepreneurs. I mean, you guys are really, both as a couple. Is that like, tell me a little bit about that dynamic as a couple, that you and your wife do that? Like, how is that something you've more led? Is it something she's done? Is it kind of like you just kind of stay in your lanes and because a lot of times one spouse or partner will be really risk, averse, or one will be much more risk tolerant. And so has that been just like you guys are both kind of willing to take risk and kind of move forward in that?
Yeah, I think we both have a really good temperament for it as far as risk tolerance. And for me personally, that's interesting, because I'm an attorney, so typically attorneys are not risk tolerant. But I have that trait, and she does too. We have certain trust in each other to be able to handle and stay in our lanes. She, especially for the gyms, she's operations. Right now I handle finance and pro formas and those sorts of things, and obviously the legal stuff that comes up, and I'm the maintenance guy too, of course. But everything else, like operations, she does that. And then when she knows that she needs me for these certain things, she'll bring me in. We've explored trying to figure out some other businesses that we might be able to get involved in together. And I think, having that experience in the gyms gives us a good idea of how it would work out with some others. Pardon the interruption, but we don't do ads. Instead, know that if you're raising capital for real estate, my law firm, Raise Law, is here to give you the expert legal guidance you need to raise capital compliantly and structure and close your deal. And if you're looking for a done-for-you fund-to-fund solution, TribeVest is the industry's only all-in-one setup and fund administration solution. Visit raise.law and tribevest.com to learn more.
Yeah. Is she ever teaching the class? Like, if you're in the doghouse, you got to take a boot camp with her, and she'll be extra tough on you or something.
She's not a trainer. Luckily, I would avoid those. Okay. I would avoid those camps for sure.
I think that'd be pretty funny. No, I think it's great, man. I love how you've created that, for yourself, that you guys, and of course, I think I've noticed this too. A lot of people, they'll be really excited about real estate. They'll be really excited about investing. And then you get one spouse is very risk averse. What do you say to someone who guess their spouse is pretty risk averse, and maybe they're concerned whether they're a passive investor or they're interested in doing business things or like this. Like how do they kind of get that person on board, or what have you seen as kind of work to kind of help them to kind of work forward with that, move forward?
Yeah, I mean it's tough. It's tough, right? Like you have to choose your significant other wisely, and it's probably the biggest decision that you'll make in your life, not only for personally but also in business. Because if you have someone that just can't get on board with what you're doing or doesn't understand what you're trying to do, and you don't mesh very well on that side of things, it makes things a lot more difficult, right? And you see that all the time. You see couples fighting about business and somebody's working too much and the other person's not working enough, or those sorts of dynamics. But I think a lot of it can be solved with education. A lot of it is just kind of this other person doesn't know enough about the business or the investment or whatever it might be, and they just need some education. So they're not like us every single day, just immersed in this and getting on podcasts and listening to podcasts and reading books and all this stuff about these assets and these businesses. So you have to keep that in mind. Like they need to understand to a certain extent so they can get comfortable with it. I mean, that's when people are scared to make moves, it's usually because they're just not educated enough to be able to assess the risk and move forward or not. Now, if they are educated enough and they do know enough about the asset and they still say, look, this is a bad deal, well, then maybe you should look at it again and make sure that it's not a bad deal. But there's definitely some give take there with personality types and how much risk that each person's comfortable with or not comfortable with.
Yeah, absolutely. I think that's definitely, I love when I see couples that are like really on the same page and they're like, yeah, we're in this and you're doing it. And it's just great. And both be active, which is awesome. So let's talk a little bit about, I guess, kind of circle back to, investing in deals, as a passive investor, if someone invests in a deal that doesn't go well, how should a passive investor respond to that? Or what are the things that, someone can do if they're not getting the communication that they need? I mean, I know there's some legal things you can do, but then it starts getting expensive. And like, what are some options as a passive investor? Let's say your sponsor is having struggles or they're just not communicating. Is there some, like, what can you do to try to get that to change?
Yeah, I mean, this is why paperwork is so important. Like, people don't want to deal with that. And, I'm an attorney, so I'm on the front end all the time, like telling everybody, hey, like, make sure we hash this out now. Like, let's have a really transparent conversation. Let's figure out exactly what each party is getting into, and let's not like hold back at all. A lot, and some of this applies to passive investing, some of it doesn't, because you have certain things that you can ask for, certain things that you can't. But be as transparent as possible up front and with the paperwork, and pay attention to what you sign and what you sign up for. Because at the end of the day, when things start to go wrong, that's what the fallback is. The fallback is, okay, this person isn't communicating any longer, or they're not doing the things that they said vocally they're going to do. What can I do? And at that point, that's when you have to look at the paperwork. So if you have a contract, and in this case, it would be an operating agreement or a limited partnership agreement that you've signed, or a subscription agreement too, you have to go back to that paperwork and look. And sometimes they may have put in that paperwork, for instance, that they do agree to give you a quarterly report. Or maybe they agree to give you an annual financial statement, or maybe they didn't. I don't know. It depends on what the paperwork says, but that's the first step. See what your rights are contractually, and that's a good place to start. Because if you do have a contractual right that they have to give you a quarterly report, or they have to give you annual financial statements, or if you request it, they have to give you certain financial reports, then that's the place to start. And you say, look, I know things aren't going as well as they should be going. I really want to get this thing back on track. Let's start communicating. But, pursuant to the operating agreement, I need to see a quarterly report, or I need to see this financial report. And put that in writing. And writing can be just as simple as an email or a text, but get it in writing. Make sure that communication is documented, not just verbally, because if something does go wrong, if there is some sort of, and this is unlikely, but if there is some sort of fraud or gross negligence or anything like that going on, at least you have that written communication between the parties, that down the line you can be like, look, I asked for this 5 times, I still haven't received it. They said they would do this. And then you can start saying, okay, at this point, maybe we're not just talking about somebody not doing a great job, or maybe we're not talking about the investment not going as well as anticipated. Maybe now we're talking about some sort of negligence. Maybe now we're talking about somebody misrepresenting what they said they were going to do versus what they do. But you need to have that in writing so that at the end of the day, you can put that together and show it to whoever it might be, your lawyer, their lawyer, or maybe a court.
Yeah, it's interesting. There's some new tools out there as well. A lot of times these documents sometimes are 80 to 200 pages. And there's a lot of, legalese and boilerplate stuff and just a lot of fine print. And I found that and I'd actually love to know your opinion on this, but I've done this occasionally where I'll take some documents or PPMs or marketing, whatever, and I'll put them in Chat GPT. And I'll just be like, hey, I'll start asking questions. Hey, how does this work? How does that work? Whatever. And it'll kind of like go through and pull that out of there, which is just kind of like a time saver. I just find for a lot of investors, it's like, I don't want to spend 2 hours reading this really, thick language. And I know you're an attorney, so that's what you do. And, but I mean, is that something that you've seen some people do, or is it, I know obviously things can be missed, but it can kind of help you give you the gist of, in this situation, this happens, or in this situation. Is that something that you kind of seen a little bit?
100%. And maybe not all attorneys would agree with this, but I encourage that. I think it's perfectly fine. Like, you've got to leverage technology, and that technology is unbelievable. It's unbelievable. And it gets better every single day. Like, you just see a new iteration every couple of weeks now. It's absolutely insane what it can do. And you can certainly upload your PPM, your operating agreement, your subscription agreement into it and ask it questions. Now, if it's something very nuanced, it won't get to it. If there's kind of like, a lot of times there's like different provisions that layer on top of each other. It doesn't understand that yet. It will. At some point, it'll be there, and probably very, very soon. But a lot of the questions you ask, if they're nuanced, it won't understand it. So what I recommend is do that, get a good high level overview. You can also ask it questions, and then I would verify. So like once it gives you an answer and it's something that's very important, like you're like, this is the answer that I was looking for, ask it, be like, well, what section did you pull this from? And then get the section and then look it up yourself, that particular section, and verify that what it told you is actually the answer.
Yeah, it's amazing the tools we have. I mean, we really are in an age where there's so much information everywhere, but it's being able to access it quickly. And it's like AI and some of these things can help with it. And I don't think, just a side note on AI, I don't think it's that AI is going to be robots that's going to take over and kill us all, or we're going to lose our jobs just to an AI bot or something. But it's people using AI, right, that are able to become a super employee or a super business owner or a super investor and really be able to get more information. So I think it can be really powerful. What are some trends that you're kind of watching? I know, actually, I want you to talk about this too. You're involved with a group called TribeVest, which helps basically syndicators. They have a portal, and they can kind of have ways to be able to access certain deals and pass that information. But what are also some trends in relation to that? What are some trends that you're seeing as far as investing for passive investors that are just things that are good to watch, or things that are helpful?
Yeah, I mean, I think one really good thing is what you talked about already. It's using AI and using software to make you a better investor. So you can, like, before you get this 200-page PPM and you're like, what in the world do I do with this? And maybe 1 out of 100 investors will read that line for line, if that. And even if they could read it, they probably don't understand it unless they happen to be a securities attorney or some sort of transactional attorney. They're not even going to get it. Fun fact, a PPM is actually supposed to be in non-legalese. It's supposed to be in layman's terms. That's the whole point of it, is so that you can understand your investment in layman's terms. But PPMs have turned into, a legal document. So yeah, even longer. But yeah, I mean, I think you can start leveraging AI and software to just be a better investor, and not just from, reading legal documents like we had mentioned earlier. That's a good example of, when you're looking into an investment, maybe put that PPM into ChatGPT, ask it questions about the investment, ask if there's any inconsistencies between the PPM and the operating agreement, things like that. But you can also use it for underwriting and due diligence and things like that. I'm actually an advisor for a startup called Brixley, and we are working on kind of a due diligence type of process where we're aggregating all the due diligence documents, we're putting them into a software, and then you're able to evaluate the deal. So you can evaluate that deal based on your buy box and those sorts of things. And it's just, and things like that just change the game quickly, right? Like before, it just takes a lot of manpower, a lot of hours, and now it just takes minutes but you still have to have somebody skilled enough to prompt and skilled enough to ask the right questions and skilled enough to make sure that you're not believing the AI and it's not hallucinating, that sort of thing. Because you've got to make sure that the information it gives you is right. Because right now it does spit out some things that don't make a lot of sense. So you just gotta be very careful. But if you aren't leveraging AI in just your everyday life, then you're getting left behind.
Yeah. No, you got to fact check. And other stories of attorneys, like I guess there was an attorney in New York that like just took his whole thing and put it into AI or a chat GPT, and it wasn't even right. It was like totally wrong. And they disbarred or something for doing that. So it's obviously as an investor, the risk is not going to be disbarred. Typically it's more you might lose your shorts or something. So it's
right.
Making sure you're doing it the right way.
Yeah, for sure. Yeah, you got to be careful. But like I said, it's getting better every single day. Like I think in 2 years, it's going to be unrecognizable. And in 5 years, we're going to have a humanoid robot in every home that we have.
Yeah, it really is changing so fast, and that's where I think it is really important to pay attention to technology, to try new things. If people are not, like as a listener, if you haven't used ChatGPT, there's an app you can use for free. There's the website. Get familiar with prompting, which is just going in and just being commands. I literally use it. I'm going to Colombia. We're recording this. I'm going this week to Colombia, and I went, here's my 9 days. I'm going to be here. Create an itinerary for me. Literally create an itinerary based on my values, what I want to do, and I can always like go off of that. But it's like it's so helpful, right? It's amazing.
Yeah. It's such a time saver. It's insane.
Yeah, it is. Well, Seth, I really appreciate you being here today. I just feel like you add so much value, both as an investor, a business owner, an attorney. Just love what you're creating with your content. And can you just share how people can follow your show and how they can hear about you and some of the things that you're doing?
Absolutely, man. Best place to go would be sethpaulbradley.com. And that's where I have kind of all my social media links. You'll have a link to Raise Law, my securities law firm, as well as TribeVest, Fund of Funds in a Box, and the podcast as well.
Awesome, brother. Thanks for being here, man.
All right. Thanks, Bronson. Appreciate it.
All right. I hope you enjoyed this interview with Seth. I love this stuff at the end there about AI. If you didn't, if you want to go back and re-listen to that, just using ChatGPT in your life, in your business, to look at PPMs. And even as an attorney, he said, some attorneys don't like that because it will miss things, but it's really a time saver. We use it all the time. We use it all the time in our business. I use it all the time in my personal life. And it's just so helpful. It's kind of replaced my Google search now because it's so much better. And instead of, we used to go spending time on Google, you spend 30 minutes researching something. Now it'll just kind of spit out the answer for you, which is really great. So I use it for health stuff, for travel, for business topics, all kinds of different ideas. Just find it really, really helpful. So hopefully you got something out of this interview. You enjoyed it. If you have not joined our investment club, and you're not hearing about our amazing deals that we're doing right now and that we're really excited about. So if you want to check that out, you can check out the link in the show notes or the link below, or you can go to bronsonequity.com and hit the join button. We'll start a relationship with you, set up a call with you, and you can start hearing about our awesome upcoming deals. So thank you for taking the time to educate yourself. Seriously, it humbles me. It excites me. It gets me fired up because the best investment you make is in your own education. We'll look forward to seeing you on the next episode. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.
Thanks for tuning in to Raise the Bar Radio. If you enjoyed today's episode, make sure to subscribe, leave a review, and share it with someone who needs to hear it. Keep pushing, keep building, and keep raising the bar. Until next time, enjoy the journey.